All right, everyone. Well, I'm struggling a little bit right now. Today was it was another hard day. Yesterday was tough, as you may recall from my recap. Today, not any better. I started the day, first two trades, losers. So 0% accuracy, two trades in. Third trade was a winner. So now I'm at 33% accuracy on the day and I'm up 200 bucks. All right, I'm not making much progress. I take another trade and I end up losing 2 grand. So now I'm in the red 2000. Get another trade, I make 2200. So now I'm back to green, about $400 on the day, and I slowly inch my way up to $1,000. But it was not easy. As I'm sitting here right now, we've got a stock that's halted up. And there's a lot of temptation for me because this is a stock that has been on my watch list for the last week and a half, and it finally squeezed. But what time is it? It's like 10:30. It took off a little too late in the day, and I didn't have my cushion on the day, so I didn't feel like I could take risk on it. I did take some trades, but they were tiny share size, and so I didn't make a lot of money. So I'm feeling a little bit of FOMO. And I'm realizing and reminding myself the second I feel FOMO, I am no longer grateful for what I have. What I have right now is real profit. It is more than I had in my account 3 hours ago before I sat down today. But when I say, that doesn't matter, I'm sad that I didn't get this, it's essentially losing appreciation for what you have. And that's when it's so easy, when you take it for granted, to then let it slip away, take unnecessary risk, take a trade at the high of the day with too much size, and then boom, max loss. And that's exactly what could happen so easily. And this is the beginning of the month. It's still the beginning of October. I'm wanting to build a cushion on October before I take a lot of risk. And the only way to do that is to be slow and steady, calm, cool, and collected. So let's look at WHLR. It is halted up at 1393, and it's showing a 1462 resumption. And so this is a major it's a major source of FOMO, and I'm sure not just for me, but for a lot of traders. We can see the resumption price right here showing 1462. Look, I love to see this. Now, when this first hit our scanners this morning, it popped up right here to 834, and I looked at it, and I was watching it right here. I was like, oh, should I do it? And I was watching the level 2, and it was about $8 by 834. It had pretty big spreads, and I said, you know what? Take a deep breath. What time of day is it? Time check, 10 a.m. How much are you up on the day right now? And at that point, so I'm currently sitting up $1,130 on the day. It's a small green day. This is nothing to brag about, but small green days are fine. So minus 600. So I was up 500 on the day before the WHLR trades, which I took with tiny share size. So yeah, it ended up squeezing, but I didn't make a lot of money on it. And I just said to myself, Ross, you really can't afford to take the risk. You already went red 2,000 bucks on API. I then took a couple more trades on. I'm down 2,700 on the name, but I went red $2,000 on the day. I recovered. And anytime you have that recovery where you go from red to green, what do you have to do? You have to take it off the table and be grateful that you're not red. Do not overstay your welcome. Be grateful for it. Be grateful for the recovery, because now we're at a point where it's 10:30. If I jumped into this with 4,500 shares up here at the top of this candle at 9, well, it hits 9 right here, and then it drops down to a low of 860. You see this topping tail? So, that's a 40-cent drop. I'd be down 2 grand, right back to in the red. Then, okay, it rips back up. So, in that case, redemption, you're all right. It resumes from the halt. It squeezes up here to 1150, hits a high of 1165, dips down. I saw some traders right in here. It pops up to 12, it pulls back, and off it goes. This is great to see, but what if you got a jackknife? And you have to say, what if? I know you got to be careful with coulda, woulda, shoulda when you're thinking about profit. But when you're thinking about risk, you have to realize that this could have done a knife. It could have done a huge knife right here where it pops up to 12 and then it dumps to, 11 or 1050 or something like that. And suddenly with 4,500 shares, you're down 6,000 bucks. So I got to the point where I took 4 trades on this and I made $649.73. And I said to myself, on any one of those trades, I probably could have lost 600 bucks. So was it worth it to have 4 winners of, $150? knowing that the risk on it was $500 on each trade? No, it's not a good risk to reward ratio. It's just not worth it. But then, of course, it squeezes and you feel like, ah, shoot, I wish I had. Coulda, woulda, shoulda. Coulda, shoulda, woulda bought 4,500 shares at 12, and now I'd be up 6,000, 8,000 on the day, right? It's easy to always look at the glass like, or well, it's not really glass half full. It's easy to always be biased that if you had taken the trade, it would have worked. But the reality is that's often not the case. So I'm glad today for a couple things. Number one, I had the discipline to stay within my parameters. And look at that drop. Did you just see that? Holy smokes. Ugh, golly, all the way down to 1260. Now it's back up to the highs, but that's a roller coaster. Do you want to take that ride? I don't know that I do. I'm going to tell you I don't. Look, I would love to be in 5,000 shares and suddenly be up $5,000. But if I had a 5,000 share position on that, or 4,500 shares for a second there on that candle down to 1250, that would have been pretty painful and pretty scary, because all of a sudden you're looking at a halt down, right? And now you're trapped, you're stuck, and it opens lower. It opens at 1150, 12, right? So, you know, I'm glad today that I was able to hold discipline. But you know, it's tough to see these squeeze without you. There's no getting around it. That you're going to feel some emotion when you see a stock go up 125%. You had it on your watch list and you weren't able to fully capitalize on it. Let's go back to the beginning of the day and we'll start with my first trade. And we'll kind of break down how this day played out. So first trade of the day was at 656 on Duo. Duo, you can actually see this Chinese stock. I'm down $518 on it. These were my first two trades. First trade was a $200 loser. Second trade was a $300 loser. So it doesn't matter. These aren't big losses, but you know, starting the day with two losses is not a great start to the day. It's not what you like to see. So what happened here was as it started to squeeze up right in this area here, I identified ascending support. And so my first trade was a dip right here at 486, which was right off of ascending support. And I think that was a great trade. Now, it ends up going up here, but it flushes, and immediately I got stopped out. So it drops, I get stopped out, and then we'll see it comes back up. Where was this? Let me look at this. Sorry, my first trade was actually just like a candle before. I got in, I got stopped out, and then I got back in, and I got stopped out on this one. So I took two trades right in this little area here, and both of them were losers. So I was like, all right, I'm in the red, $500. That's certainly tolerable, well within my max loss, but let's be careful. So those were the first two trades on Duo. Now, the next stock I traded was NCI. NCI, I'm green on. And this is one that was strong in the after hours yesterday, kind of rallying up here, moving higher, and then dropping, popping up. As it broke right here, I got in it, and I ended up making $700 on that spike. So $757. So that's what put me from red on the day by 500 to green on the day by 250. All right, so I made a recovery, a miraculous recovery. All right, well, it's only at that point it was 7:15. So then I didn't take any trades for 45 minutes. And then at the top of the hour, 8 a.m., API. Now API, higher float. I didn't like it. Initially, I was like, no, I'm not going to trade it. When I saw it in this area, I was like, no, I'm not going to trade it. But then I had to acknowledge that the thing was moving pretty cleanly. And I pulled up the level 2 and I watched it through this area and I was like, yeah, you know what? Shoot, this thing really is, it's moving cleanly. I can't disagree. And it's not easy to borrow, not at light speed. So even though the float was higher, which typically for me is a no-no, I said, you know what? This is something that I'm going to have to, I think I'm going to have to take a stab at. So this was at 6. It comes back up right here. And right here is where I took my trade. And you know what? This was a fine trade. I got in right here at $7. It pulls back to support at 7. I bought the dip at 7. It pops up to 710. And I was like, nice. I held. And then in this candle, it flushes down to 680. And I stopped out. All right. Well, you know, is it because the flow was higher? I don't know. It had some nice pullbacks. It had some nice action. that trade just didn't work. I don't know. It is what it is. But I did trade a little outside. I mean, if I'm going to be honest, was not an A quality setup because of that float. So I realized in that moment, I was like, okay, you weren't patient. You took a lower quality setup and look what you got, $2,000 loss. So then I start looking at API and I'm like, you know what? Maybe I think maybe I've got the right idea and maybe this will work. So I ended up taking 2 more trades on it, actually. I took 2 more trades on it. One was I don't know, it was a dip somewhere in here, and another was a little breakout. And I lost on both of those. So then I was like, you know what? Stop. Pause. You're trading low quality setups. You've now had like three losses on this stock. You're not going to make it back on this stock. Wait for something that's clean. So I was like, all right, wait for something that's clean. That's good advice. So XIN, this one had put in a pretty big move pre-market, and it popped up and rejected. So this was pre-market, pops up here to 8, it rejects, comes down. And right here, micro pullback, I bought that breakout over whatever this was here, over the volume weighted average price. And on that, we got a pretty nice move. I made $3,000 on it. So I was like, okay, there you go. Float, 2.4 million shares, Chinese stock, same as Duo, same as API. These are all Chinese stocks. So now with that, I'm back to flat on the day, basically. All right, so I'm flat on the day. Or I guess I'm up 500 on the day, something like that. So, and then we had ADTX, which I made $31 on, which was nothing. And then WHLR comes up. So when WHLR came up, I just felt like I didn't have, I didn't have the cushion. I just wasn't in a position where I could afford to take a lot of risk. And I think it's awesome that this is going higher, but this is one of the problems that we have with stocks that are higher priced and have lower floats, big spreads, and they're not very liquid. So if you wanted to take 10,000 shares of this, if you wanted to trade with 10,000 share blocks, that would not be easy. I mean, look, you've got 20 cents, 15, 20 cent spread here. That's a lot. That's a lot in between the spread. Look at how fast that goes to 59, but on what volume, right? The volume on that candle. I mean, we're seeing, in the light volume candles, 15,000 shares on the 10 second. So, I mean, the volume's going through. There's 300,000 shares on that 1 minute candle. But, just looking at it, I feel like if I put a sell order out here for 10,000 shares, it would just sit there. If the algo would see it or the market maker or whatever, and I would just wait and wait and wait. Now, right now, it looks like there's kind of a hidden buyer at 15 because it keeps coming down to 15, but holding. So as long as it holds 15, you might feel like, okay, maybe I'm all right on this. But then if it breaks 15, you're not going to stop out at 14.95, 14.96. You're probably going to get a bigger drop. Now, on the upside, it seems like there's a little resistance at about 15.55, 15.65. And the high a day is 15.88. Given the float being so low, if we break this level, there's 88. But look at that. So we tap the highs and then we're back down to 1540, 1535. And what's happening here is people that just bought for that high day breakout stop out. They sell on the bid, they bail out. So when you see those orders in red going through, those are people bailing out. And now more people are bailing out who held a little longer than they should have, and then they're panic selling. So you get that panic flush. And now you look at the chart and it's a topping tail candle and it's a rejection. So just like that, you could have lost 50 cents a share in an instant. And if you had 10,000 shares, I don't know that you would have been able to get out without suffering a good amount of slippage. So, this is one of those stocks that definitely has the potential to squeeze a $25, $30 a share. I don't know that it will, but it has that potential based on the float and just based on the history of how it's traded. And it's up 126% today, but it has no news. It does carry risk. And, for me, it just comes down to this sort of frustrating, predicament where I like the stock. I feel like I could have done really well on it, but I didn't have a cushion. Why didn't I have a cushion? Well, I suppose part of it's because I took a trade on API that probably shouldn't have taken. But, even if I hadn't taken that trade, I still think I probably wouldn't have been in a position where I would have taken much risk on it. Because aside from that, I still wasn't in a great spot on the day. I didn't hit my daily goal today. I didn't hit my daily goal yesterday. So right now, just kind of, struggling a little bit, feeling a little frustrated, but also trying to remind myself, hey, look, be grateful for what you've got. There's a lot of people who work a lot longer and a lot harder, and they're not up $1,100, in 3 hours. So be grateful for what you have. Be grateful for the privilege to be able to sit here every single day and trade the market. You see that 13,000 share seller there at 51. So, you get a bigger sell order like that, and that's noticeable on a stock like this. That's a $200,000 order. It's big. It starts to become, there's 10,000 share buyer at 64 on the level 2. So, you're starting to see some bigger traders coming out and the buyer's gone. But, you got to be grateful for what you have. And I'm a big advocate of focusing on one trade a day. Get in, get green, get out. Don't overstay your welcome, especially as a beginner. When you become more advanced, you start falling into, you start risking falling into these traps where you start over trading, you go into the red, then you're trying to recoup the losses. So, it takes a lot of responsibility to be able to trade in a margin account safely. It's not something that is super easy. It takes time to get good at. So anyways, this is where I sit today, $1,100. It's a small green day, but look, I pulled a little profit out of the market. I got a little more in my pocket than I had at the beginning of the day. It's the beginning of the month of October, so 2 green days in. And I just think that right now, the best thing is for me to focus on A-quality setups. I had a little bit of a, one trade that deviated. And this is something I'll say. I saw someone mention this in the comments. Ross, you don't always follow your rules. What's the deal with that? And I think the thing here is, I recognize that, and it's good feedback because I do struggle with that at times where I set rules for myself. I got my strategy. These are the rules. And then I deviate from the strategy and I lose. So it's like, what's the deal? Or sometimes I'll deviate from the strategy and I'll win. So then it's like, and that's the biggest problem is that in the market, you can get positive reinforcement for bad behavior, essentially. Oh, I don't know if it's, but you're getting reinforced for bad behavior, essentially. You break your rules, but you still have a winner. I could have broken my rules on WHLR and had a great winner. And then you're like, well, I guess maybe I don't need to always follow that rule. So you get this inconsistent reinforcement. Sometimes you break a rule and you do get punished. And you're like, okay, well, really shouldn't trade those like I did today on API. But I think the challenge is the market is dynamic, and sometimes you have stocks that are exceptions, like GameStop. GameStop was an exception for my strategy based on price, based on float. It didn't make sense to trade it typically, but I'm glad that I traded it. And at a certain level, I think that this is the funny thing about something like trading or really mastery over anything. There's the sort of textbook way of like, this is what I should do every single day. And then in the heat of the moment, things get a little squirrely and you're like, whoa, or you see something like GameStop and you're like, oh, I'm going to go do that. And you would think, probably, based on the sort of written process, shouldn't have done that, but the outcome was positive. And if in total, the outcome is always positive when you deviate or, not every single time, but in total, when you look at all those deviations, then it's like, I guess that does work. So then the question is, at what point do you need to be in your trading career in order to deviate from sort of the process that's been laid out, which is really designed to keep beginner traders safe? So as a beginner trader, it's so much more important for you to follow the guardrails and stay disciplined, because that's when you don't have the educated intuition to venture off and take some of these risks. And you don't have the track record and the profit history to afford the losses that may come with taking some of those risks. So that's something that you kind of have to keep in mind, that I am at a different place than a lot of beginner traders. And a lot of things that I teach are things that I encourage beginner traders to utilize in their own trading, because I want you to have the training wheels on. I want you to be careful. But then you're going to see me zipping around and I don't have training wheels on. So you're like, Ross, I don't really get it. You're kind of deviating out of the standard sort of set of what you would typically teach for a beginner. And that's true. It's not wrong. And there are times when even I say to myself, Ross, don't do this because the result is loss. And then I'll do it anyways, because in that moment, I thought this might be the time where my educated intuition is correct and I should take this trade. And sometimes that's right and sometimes it's wrong. And that's the reality of trading. It is difficult in that regard. And in total, if you're going through a period where you're not following your rules and you are losing money, that's when you need to go back to basics and get dialed in with like, okay, what is my bread and butter? What can I really count on? What can I really trust? And that's what I did during the last week of September. And today, that trade on API, I should have just waited. I saw other people trading it. Other people were making money on it. And I was like, all right, no, you guys are right. I mean, it's obviously, I feel kind of silly now saying I shouldn't trade it because look at this nice move. That's from 6 a.m. So then when it comes back up, I'm like, all right, you're right. And then sure enough, it didn't end up working. So that's okay. It's okay to have setbacks. Nobody's perfect. We're going to have these days that things go a little off track, but it's never too late to get recentered and to get back to focus. So wherever you are in the month right now, it's second day in, wherever you are in the month, if you didn't have a good first couple days, I didn't either. All right. So we're all in the same boat there. It's been choppy. It's okay. We can just put that behind us, let it be what it is, and focus tomorrow on high quality setups, trading less, and really asking ourselves, what's the quality of the market? The market through the month of October, there's no doubt that there will be some good opportunities. WHLR presented an opportunity today. Wasn't a great opportunity because it occurred at the wrong time of day and the price and the spread were a challenge. But this was the first, 100% move that was relatively clean, and we're going to see more. There's no question about it. So save your risk for when we're having a day when it really makes sense to take risk, when you're seeing the reward potential. I think that that's the right approach for this market. We are seeing momentum in these Chinese names. That does present some challenge as well because, we know a lot of them are subject to popping and then dropping. Duo, really challenging yesterday for a lot of traders, halted down today. It's not cooperating. It's difficult. It's still holding up. Shorts are frustrated. Longs are frustrated. It's not breaking out. It's just sort of hanging there. So that one's really tricky. XHG, we obviously talked about that in yesterday's recap, the 90% drop. That was unreal. And yeah, we're just seeing a lot of these kind of small cap, low price stocks, seeing the scans, a number of penny stocks, and a lot of them just don't feel super safe. With the overall market, we're dealing with uncertainty around the election and conflict in the Middle East, which has escalated. So we do have these variables that are creating some uncertainty. And I think the market is very top heavy up here. And there's nothing really pushing it higher, but there's a lot of things that have the risk of causing it to drop quite a bit. So that's something to sort of be aware of. And I think the month of October may be a little bit choppy as we come into, an election, which is, about a month away. So that's going to create volatility, and we like volatility, but it may also create some nervousness and a bit of hesitation on the part of traders and investors, and that's not going to be as great because you want to see strong conviction and sentiment. Volatility is great, but we want to see some real buying behind the volatility, and we didn't really see that on WHLR, in fact, anything this week, and so we're getting ourselves off to a slow start. But again, it's only a couple days in, and I'd encourage you to remember that when it's slow, it often feels like, oh, it's never going to pick up again. And then when it's hot, you think, wow, this is so great, and you don't really expect it to cool off. It's just we got used to the market we're in, and then we're not expecting it to change. So manage your risk. I think for those of you guys right now who are at a place of practicing the simulator, there's a lot of opportunities here. WHLR, you could be practicing that a ton. Definitely just watch the stocks that have high relative volume. So we look at volume in the last 5 minutes. Well, top relative volume scan, that's fine. But also top volume in the last 5 minutes, and you can see some of these stocks that are really doing something interesting. So keep an eye on the top 10 in here. These are good candidates to be actively trading and practicing, and just the better you get at reading the tape, reading sentiment, the better it'll help you for when the market does pick back up. This moving back up to a halt level here underneath the highs, this is like very high risk area. The MACD is against the trade. You've got a volume divergence. Is it going to work? It might, but typically it wouldn't. It's just a very high risk trade. So, but you've got to learn those patterns. That's trading is pattern recognition. You learn that when this happens, this happens. When this happens, this happens. And so you develop such a relationship with understanding these patterns and what's coming next that in a way you can start to predict the future, to a limited extent. You say, oh, I just saw that happen. That means this is coming next. So when you see a stock that breaks out in spite of sort of the logic telling us it shouldn't, that can sometimes indicate that traders on the opposite side have gotten stubborn, maybe shorts. That could happen on WHLR, but I think that I think at this point in the day, coming up to 11, most retail traders are probably going to be thinking, I can't tolerate the risk of this. It's too jumpy. Trading it on a 1 minute or 10-second chart is not realistic. Trading it on the 5 minute, well, you're just going to have huge stops. Is it really worth it? Maybe it is, but I think for me, it's not. So that's going to be it. I'm going to lock it up here. And what I'm going to do is I'm going to shut everything down because I don't want to look at charts for the rest of the day. I don't want to look at WHLR. I don't want to see if it goes to $20. I don't want to know about it because it's not going to serve me at all. Now, when I sit down tomorrow morning, okay, I'll take a look at what stocks worked and what moved higher and whether or not they present continuation opportunities. But there's no sense sitting here if I'm not going to keep trading because I'll just get FOMO and I'll just get frustrated. So that's an important exercise in discipline. All right, so that's it for me, and I'll see you guys back at it first thing tomorrow morning.